Know where you're watching from. Where are you watching from? Where are you watching from? Alright? Where are you watching from? Okay, let me know in the comment section. Where are you watching from? Okay. Let me know in the comment section. Where are you watching from? Where are you watching from? Very important. Where are you watching from? Okay. Yes, so today will be very great and interesting. So as we take some live trades, run some analysis, and yeah, make some profit, minimize losses. That's the goal. Make profit, minimize losses. So let me know where you're watching from, and then so we kick off from here. Okay. Okay. All right. I can see Abuja, India, Enugu, Asaba, Delta. Okay. Ibadan, Ghana. Okay. Great. All right. Fantastic. Yeah, I can see that a lot of you are super pumped and ready to learn. Yes, so now, today we'll start our analysis with the euro. Okay, and then I would give you all the chance to choose which currency we should analyze next. All right, great. Nice to meet you all. Philip from South Africa, Adisa from Ibadan, Nigeria, Samuel Asante from Ghana. Okay, Lawa from Kaduna. All right, thank you very much, guys. I'm glad you guys are here. So let's get straight to the point. So today we will be looking into Euro USD. All right. The important thing when you get to start trading is you are trading for a purpose. And what is that purpose? The purpose is to look out for market opportunities. All right. And the purpose is to look out for market opportunities and to take advantage of that opportunity in the market. All right. So it's important for you to be more critical and more logical with your analysis than allowing your emotions to be cloud your judgment. All right, because trading with emotions would always lead you to losses upon losses. It might lead you to gains, but the gain is a short-term gain. It's going to be short-lived because you are riding on emotions. You're riding on what you think and not what you see. Most importantly, when you are trading, you focus your attention on what you see, not what you think. All right, what you see, what is the market saying, what can you see, right? Not what can you think. Okay, and that is why it's important to be able to take time and look into the market and see for yourself. So today we are looking into the market to see for ourselves what are the market opportunities. Over time, we see that the Euro USD market has been on a downward and declining trajectory. Okay, so the question of what is the market opportunity for us, long term, short term. Okay, so here we start with the top down approach from the monthly time frame down to the lower time frames and look out for where we can leverage on opportunities. All right, follow me. So this is a monthly time frame, and now we're asking ourselves, what can I see the market doing, or what can I see that the market has done? Because we are coming from three perspectives, all right, and these three perspectives are what the market has done, what the market is doing, and what the market will do. What the market has done, what the market is doing, and what the market will do. Now, when you look at the monthly time frame and you look at the historical price movement, what price had done in the past, that is what price had done in the past. Then when you look closely into the present here to see the current candle, what is happening with the current candle, you are looking at what price is doing at present. But when you now look at, the future, this other side, to look at what next, what is the next move, that is what price will do. So what price has done, what price is doing, is used to predict what price will do. So we zoom out to look critically at this. You need to understand that when analyzing a chart, there are two things that actually creates this chart that you are seeing. There are two activities that has been going on and is currently going on and will continue going on, to create the charts that you are seeing, and that is demand and supply. Okay, it is the what's it called? The interaction of demand and supply that is being represented in these candles in blue and green. Sorry, in green and red. All right. So demand and supply is being captured in this chart. Okay? And that is what we want to look into now. We want to look into what demand and supply are done in the past and what they are doing in the present to predict the future. So, a quick look from here, where my arrow is. All right? We would see that demand is evident here. From here, we saw price went up. Okay, demand. Who carries out or who affects demand? They are the buyers. So the buyers affect demand from here. And what happens? Price went up. Okay? Now, when price could not, when buyers stopped buying and started selling, which is supply, okay, what do you see happen to the price? The price started falling. And again, at this level, buyers picked up again. And you can see that demand, was created. And what? Price started going up. Okay? At this point, we saw that sellers stepped in and started selling. Okay? Now, and started selling. And you can see from here, they sold down to this level. That is supply. Okay? This red candle indicates supply, which indicates that what? Sellers are selling off euro and buying up the dollar. All right? When demand is being created, it indicates that buyers are buying up the euro and selling off the dollars. So as you see market move up from here, this is buyers buying up euro. All right? Because they see that euro is gaining more value than the dollar. But each time they start selling, they are selling the euro to buy the dollar, because the dollar now is gaining more value, all right, than the euro. Okay, so I believe I've been able to establish this basic fundamental knowledge in your mind, to know that the charts are a picture that captures the activity of the buyers and the sellers actively playing in the market. So let's look at regions via which the buyers and sellers had created certain footprints. Okay, these footprints would end up becoming our support and resistance level. Identifying these levels of support and resistance and the direction of the market, if it's an uptrend or a downtrend, okay, would give us a forward guidance into what the next move of the Euro USD would most likely be. Let's take a deep dive. So here we are mapping out the levels of support and resistance. The levels above here is a resistance level. Okay? It's like a ceiling. Alright? And the levels of support here is like a floor. So which means for the ceiling, price is being rejected from penetrating and breaking out further than that point. And for the floor, which is the support level, price is being restricted from going down further. Okay? At the point where price breaks out of the support or resistance level, okay, it passes a message, all right, that there is a possibility of a continuous, movement in that same direction. So if it breaks up, if it breaks out of a particular resistance level, it shows that the bullish momentum is high, and it broke out of that level, and there are chances that they would continue to be a upward movement. If it is a support level and price breaks down below it, there are higher chances that price would continue to go down. Now, obvious example is what we can see here on the Euro USD. So if you look closely to the Euro USD here, you will discover that this level is a support level. Let me mark it out. So coming. Okay, good. Let me see what I can do here. Alright, support level. Okay. Can you see that? So this is the support level. Alright. Good. So this indicates that price is being restricted here. Okay? Price is being restricted here, and each time price comes to touch this level, it is being rejected. Okay? Now if you look at this place, let me zoom in. Price came and broke out through this level. Okay, look at this place. Price came here, was rejected. Price came here, was rejected. Price came here, was rejected. All right. So this is an indication that this level is a support level. All right. And of course, a strong one at that. Right. Good. So a strong one at that, which is 1, 2, 3. So this is one footprint, second footprint, third footprint. Okay? Yeah. Now, this gives this level a very strong support level. All right. Now, but if you now look closely, towards the end of the chart, you will discover that so if you look closely towards the end of the chart, you will discover that price broke out of this support level that has consistently restricted price from breaking down further. So you see, price was restricted from breaking down further here. Price was restricted from breaking down further here. Okay. Price was restricted from breaking down further here. All right. Now, so we have 1, 2, 3, the levels where price was restricted. Okay. Now, if you look here too, price was also restricted from breaking down further. But when you look at this, the fifth touch of price, what happens? It broke out. All right. So now, if you can see that price broke out of this level. Now, what did you see price doing after the breakout? It went down, and the next candle is still going down. That is why I said when there is a breakout, there is a higher chances that there would be a continuous movement in that same direction. All right, there will be a continuous movement in that same direction. Good. Now, when a particular level, a support level is broken, which is what we are seeing on our Euro USD and on our monthly time frame, that this support level has been broken, okay? And now we have, look closely, we have the breakout candle, okay? And also the candle that actually, came after the breakout candle, which is the month of August. All right, this is the candle for the month of August. So it had initially gone up, okay, which is normal as far the market wanted to retrace, all right, and retest. So now there was a sell pressure, and now we are here, okay. So this is to tell you that from the look of the chart, all right, we are in a bearish market here, okay, given that the Euro USD has broken a very strong support level at 1.04933, okay, and we can see that it is currently trading at 0.9963. all right. Now the question is, what is the opportunity for us? That is the question. So let's look at the opportunity for us going down lower into the lower time frame. So we now take a deep dive into the lower time frame, which is the weekly time frame. This is the weekly time frame. All right. Now, because on the weekly time frame, we're now asking ourselves, because we want to be able to see clearly what is actually going on in the weekly time frame, all right, in the lower time frames, because what is going on in the lower time frames give us clarity into what is actually happening. Okay, good. Good. Now, when you look closely, you discover that price broke out, came to retest, and kept going down. All right. When you look at this bearish candle here, you discover that it's a fully bodied candle. This candle. Let me see if I can draw an object around it so that I need us to understand it very well. Okay, I want to draw an object around it. Okay, good. This candle. Okay. Good. This candle in the middle, all right, is what I want us to focus on. So when you look at this candle now, it is a fully bodied candle. Okay, it is a fully bodied bearish candle. All right, now this is a strong indication of a bearish momentum. If you would observe this same candle, is what you can see here. All right, this same candle is what you can see here. All right, similar to what you can see here. Now that's to tell you that this candle is very significant to the direction of this market. All right, now from the look of things, this market would continue to fall. The Euro USD market would continue to fall. All right, now let's take another deep dive into the daily time frame. Good. Now, I have always said that the daily time frame, gives you a clearer picture, a clearer insight into the lower time frames. As you go lower and lower and lower, they give you a clearer picture, a clearer insight into what is currently ongoing. So when you look at this, you discover that there have been equilibrium at several points here. So let me zoom in. Look at this. I'm going to explain why we are having this object here. This shape. Okay, good. This shape. As you can see, this shape in the middle of this box. There's a reason why we are having this shape. All right. Now we are having this shape because of demand and supply. All right. Finding it difficult to what's it called? To meet. All right. So when you have candles like this, okay, it is more like saying that what a demand and supply met at an equilibrium point, which means at this point the volume demanded was almost equal to the volume supplied. All right, because what moves the market is when, if there is high demand, all right, and low supply, what happens to price? Price goes up. But if there is more supply and low demand, what happens to price? Price keeps falling. All right. So, but because there is more demand, more supply, a friction, and they create equilibrium where almost demand and supply becomes equal. That's what we call what? Equilibrium point. So when you look at this here now, what happened here is equilibrium. So demand pushed price up, all right, supply pushed price down, and they had to meet here. Okay, now this also indicates something. There is a sell pressure coming from this week that we can see here. From this week also we can see a sell pressure, and from the current candle, which is the candle for today, the candlestick for today, we can see a wick also being created. All right, now this wick is a strong indication that there is sell pressure here. Let me mark that region again so that we all can see. There is sell pressure here. All right, because obviously you can see that it is this region that we have the wicks. Okay, we have the wicks at that region. Okay, good. Now when you have wicks at this region, now you discover that sellers are selling off here. There is more sell pressure at this region. Okay, good. So let's do this. So now let's go to the lower time frame again, which is 4 hours. Now when you look closely at what is happening on the 4 hours candle, now interestingly, I want you to have a focus on this particular area of the chart, because that's the very important area. Okay, this particular area of the chart. Okay, this particular area of the chart is very, very important. Very, very important. All right. Very, very important. As you can see, this particular area. Okay. Good. So, if you look at this region here, where price came down, went up again, came down, right? And if you look closely, you discover that, like I said, there is a sell pressure here, and that's what has been, you can see in the last 4 hours. Here, you can see this bearish candle. First, you can see this wick to the downside, sorry, to the upside. All right, indicating a sell pressure, followed by a very fully bodied bearish candle, followed by an armor, okay, bearish pin bar, So what I see here is a continuous fall, all right, and I would like to place a sell order here, right, at the market price, which is what we are going to do now. Okay, I'm selling now. I've seen an opportunity to sell at this spot. All right, good. So before I place my sell order, I need to first identify my exit strategy. Now I know that, okay, I want to enter the market immediately, okay, which is my entry strategy. What is my exit strategy? It's very important for you to have your entry and your exit strategy before you place a trade. Know where, at what point do you want to JP, you want to move, and you want to leave the market. All right, so at this point here now, I'm placing a sell order here. I know, interestingly, many of us wants to see what is in the 1 hour time frame. So let's look at what's in the 1 hour time frame. Okay, so you can see here that this is what is on the 1 hour time frame, but I want to sell at this level and set my stop loss here. Okay, set my stop loss here, and my take profit would be, let me take it back to the 4 hours time frame. Okay, good. My take profit would be outside the box. Yeah. Good. So my stop loss would be here, and my take profit would be a bit outside the box. Yep. Let me look at the daily time frame. Okay, cool. Okay, cool. Let me look at the weekly time frame. Okay, cool. Good. Okay. Yeah. All right. So let's set our account now. Let's take the trade and set the account. Okay, I click on sell. Okay, so I click on sell, and I put my sell order here, my stop loss. Yeah, so what I do is I do a top-down approach, higher time frame to lower time frames, and mostly I execute my trades on the lower time frame when coming in for a short-term opportunity, like taking within 24 hours. I want to come in and go out, right? But if it's a trade where I want to swing it, all right, over a long period of time, I would um I would just use the daily time frame to enter into the market, all right, and swing it, because of course swinging can take 1 week, 2 weeks, and as long as possible, all right. So, and there are also position traders that takes months before they exit a particular trade. So here now I would be I've clicked on the sell button, and my stop loss, first thing first, placing my stop loss at 1.00484, and my take profit would be at right coming. Yeah, and my take profit, let me check out the price level again. Okay, good. So my take profit would be at 0.98426, and then modify. All right. So now I've placed my trade. If it goes against me, I would lose $7. All right. If it goes in my favor, I would make $12.69. All right. That's something close to 2:1. Good. So we've been able to analyze this. All right. Yeah. So now I want to open the floor for questions, because I can see, you might have questions now. Do well to ask your question now. Let's have a question and answer session. I give clarity to what you need to understand. All right. Please use the comments, use the chat box. All right, and drop your question so that we'll go over it. Okay. I need you to, if you are lost somewhere, let me know. All right. Great. Yes. So if you have any question, please drop it in the live session now. Drop it in the live session if you have any question. Very important. If you have any question, drop it in the live session now. If you have any question, drop it in the live session now. Okay, I'm waiting for you guys. I'm waiting. Okay, so for those asking for Telegram group, a link has been dropped, on the chat. You can join the Telegram group and get more insights. Yeah, please do ask a question. Okay, Peter said, thanks for the session, very informative. Oh, thank you. You're welcome. He said, please go back to the weekly time frame. I have a question there. Okay, let's go straight to the weekly time frame. Interestingly, we are on the weekly time frame, so you can ask a question. Yeah, so ask a question. For Onyebuchi, you said please go back to the weekly time frame chart. I have a question there. All right, so ask a question. You can type it and drop it. Okay. I'm waiting for more questions. I'm waiting for questions. This is why we are here, so that we can learn. Yes, this is the weekly time frame. Onyebuchi, I'm currently on the weekly time frame already. All right. So you just ask your question. I'm currently on the weekly time frame already, and I'm waiting for your question. I'm on the weekly time frame already. All right. So someone is asking which indicator is more advisable to use. So now there is no perfect indicator. There is no one size fit all indicator, right? However, you can always learn which one works for you. All right. There are people who would use Bollinger Band, with a mix of moving average, exponential moving average, or simple moving average, like that. So there are persons who use the stochastics and the exponential moving average. There are people who use 2 to 3 indicators. So it's just for you to learn which one works for you. All right? Yeah. Okay, someone is asking, is already in a multiple here low, doesn't it matter? Okay, doesn't it matter in what sense? Because if you look at it from the monthly time frame, you can see that it has broke out of a key support level here. Look at this level here. This level is a key support level. This level is a key support level, and you can see that it has broke out of that level. All right, so where is it going to touch next? This level. Okay, which means that there is still room to this level, right? So there is still more room for price to go down to this level, okay, and maybe go up a bit and all right. Someone is asking, can one buy on downtrend? So yes, you if you want to buy on downtrend on a lower time frame, it's cool. If you see an opportunity there and you're coming in, all right, on a lower time frame, it's all good, right? So the lower time frame, the higher time frame only depends on what you are looking for in the market, how quick you want to exit the market, how long you want to stay in the market, right? So but if you want to come in and jump out of the market, then you can go for the lower time frame, okay, which gives you more flexibility to come in and go out of the market. All right. Please, how when the market is going to go up? Okay, how and when the market is going to go up? Yeah, so no one knows how and when the market would go up. All right. However, we can forecast, okay, the possibility of the market going in a particular direction. All right. So, but this forecast are still subjected to fundamentals. Okay, are still subjected to demand and supply. Okay, so these are the things we need to focus on. Okay, someone said on the 26th week candle there is a selling pressure, but suddenly the next candle goes bullish. Please zoom in to that. Wow. 26, I think you're talking about this region, right? If I get you clearly, yeah, it should be this region. Okay, it should be this region or something around this region where we see, yes, it should be this region. I believe you're talking about this region or this region. So when you say 20 something, it should be there or here. Now, as you can see here now, that price turned, the bullish momentum came in here, and what do we see? Price went up. Same thing applies here too. Okay, but we can see that the case was different here, as a further breakout was done occurred here. A further breakout occurred here, as you can see. Okay, a further breakout occurred here. Do you get? So this is the level where you are looking at and it's a game changer. All right, there's already a breakout that changes the already existing flow and direction of the market. Yeah, someone said, which other things can I use for confirmation? Okay, from going from monthly time frame to the lower time frame. Yeah, so other things you can use for confirmation is to look at the levels, like the support level, the resistance level, what level is the market. Okay, so aside from going from using multiple time frame analysis, you can also use support and resistance level, and also chart patterns. If chart pattern shows up here now, you definitely know that, oh, okay, now if you look closely at this monthly time frame, right, you discover that this monthly time frame is giving some kind of descending triangle vibes. All right, it's giving some kind of descending triangle vibes. Okay, which you know, definitely you're looking at it that descending triangle is like a chart pattern that indicates what a bearish momentum. Okay, so you can also use, you know, chart patterns, okay, as a confirmation. All right. Someone has said how, okay, you can, how beginners set up their account. Yeah, you can search on our channel. You see several videos that tells you how to set up, you know, your account. Okay, it says how can I know when to buy and when to sell? And we are going from how many time frame? Yeah, so how to know when to buy and when to sell is to keep learning, you know, like we are doing right here. Okay, having everyone here, and then we are learning, we are picking trades. Okay, so you get to know what levels, the things I am saying, the things I am doing, okay, and try to practice it, because this content and this session is strictly for educational purpose. So it's also to teach you to know when to buy and when to sell. All right. I also recommend that you go over all that of our videos aside from this, and then, you know, you could expand your knowledge from there. Justus said you only used support line in analyzing this, and this is because it is a downtrend. Yes, it's because it's a downtrend. So if it's an uptrend, I might want to look at, you know, resistance levels. All right. If it's an uptrend, I want to look at resistance levels here. Okay, so you can see that there are several resistance levels, both minor and major resistance level, but they're not significant to the analysis now, because we are not, the market is not, you know, tilting, you know, or going towards the direction. All right. Yeah, I want to stop. Okay, on. Okay. What are the question? Okay. Yeah. So that's all. I believe you guys have gotten value from this. Say, what is the percentage profit of technical analysis with 100 trades? All right. Yeah. I know. There are so much interest in profit and profit and profit, but I'm going to tell you something that when it comes to trading, it is not about how much you make in the market. It's about how long you last in business. So it doesn't make any sense if you come into the business today and then tomorrow we don't see you, or you come tomorrow and then next tomorrow we don't see you. So it's not about, oh, I make so much today. It is about, what is the sustainability of your strategy? Okay, would you be here in 1 year? Would you be here in 2 years? Would you still be trading in 3 years, 4 years, 5 years? Okay. Yeah. Yeah. So I believe you guys have gotten value. So if you have gotten value from this session, you know, if you've learned something new, let me know in the comment section. All right. You know, Octa FX, I've put this together, you know, for free to actually educate you on how to trade and you know, experience live trading sessions like this. So if you've gotten value, let me know in the comment section, and don't forget to subscribe to our YouTube channel. Click the notification button, you know, and be the first person to get notified whenever we have you know, a new webinar. All right. So if you got value from this session, please let me know if you got value from this session in the comment section. All right. Yes. Someone saying, I like your analysis, but how to make our decisions based on candlesticks. All right. So yeah. So there are different candlesticks. All right. There are different types of candlesticks. Okay. And you just need to keep learning, because the more you get to know by getting involved. All right. So you get to know by getting involved, right? You get value by engaging. So when you look at this candlestick here now, all right, you want to go and research about it. That what this candlestick. So this candlestick only indicates equilibrium, like I explained earlier. Demand and supply, all right, having to be equal. That's where this equilibrium is being created. Okay, and this candle is known as the doji candle. All right, the doji candle. It is it is a candle that indicates reverse pattern. All right, in the market. So you, as you can see, when it appeared on the down, when the market has been going down, when it appeared, what happened to the market? It moved up. So this is a reversal in candlestick. It indicates what reversal. All right, if the market has been going up for a while and these same candlesticks appear up, all right, there's a higher chances that what the market will start going down. So the more you engage with the market, the more you study it, the more you understand these candlesticks, the more you improve. Okay, yes, I know you want to know so much, but you also need to embrace the process of learning. All right, the process of time, the process of consistency. Okay. Yeah. Okay. Yeah. Thank you very much, guys. Thank you. Thank you. Thank you. Thank you. Thank you. Thank you. Um. Yeah. Yeah. Lucky said, "Thank you very much for the lecture. Learned something new today." Okay. Daniel, thank you very much, sir, and the lecture. You're welcome. You're welcome. So I'm very much glad that today was fruitful. For Ruth, she said she has learned a lot. She said, "Thank you very much, sir. I enjoyed every bit of the class. You're gradually changing my trading skill." Yeah, that's the goal. That's the goal of Octa FX, and I believe that you stick with Octa FX and you keep using Octa FX as you advance your trading skill. Yes, so please let's give a shout out to Octa FX in the comment section for putting this together and for giving you the knowledge, premium knowledge. Okay, so thank you very much, guys. Every Thursday we always have this session. All right, so you don't want to miss out from the next session by next week Thursday. All right, so see you guys in our next session. Thank you very much. Peace out.